episode of Market Buzz. Today's we have Dimitri's back from holiday, and Timothy's making some money on Ethereum. That's at least what I found out just before we hit the live button. We should be ready to go. Welcome everybody. Welcome to another episode of Market Buzz. Good to have you guys here. Make sure that you check out our portfolios in the link below. If you're interested to look at what we are trading and what we're investing in, it's gonna be interesting because we haven't had Dimitri's for a while, and the macro talk has been lacking. It's been a lot of crypto stuff, a lot of crypto stuff. But it'll be interesting to see what happens today. So,
Me and Mimi took over.
yeah. It's the truth. It's the truth. And I love it. You know what I mean? I love it. But I've been wanting to talk about the big, beautiful bill. I've been wanting to talk about a couple of other things. I need to dig a little bit deeper, but there's a couple of trades I'm going to be talking about today. So make sure you watch until the end. And if you have any questions, put them in the chat. I'm more than happy to make this guys answer it or leave it in the comments. I'll make sure that they get to it later. All right. So first things first, what's happening in the markets? Who wants to take this one? Timothy or Dimitri's?
All right, so let me go first. So I hide in my head. So what's happening in the markets? I've been paying attention to semiconductors lately, the earnings, AMD specifically, which, by the way, I told you guys like 2-3 months ago about AMD. I didn't know it was going to be this big. I mean, I don't want to tell you guys that I knew it was going to be this big, but I had a feeling about AMD that it was coming up. And despite the earnings, which they were good, but the forward guidance wasn't exactly as investors expected. But you are right, Nestor. NVIDIA, it's in a different level. NVIDIA, it's in a league of its own, and nobody's denying that. I never denied that. However, NVIDIA has 80% of the world's like market in semiconductors.
Or at least AI chips, right?
AI chips, yes. Sorry,
Yeah.
my bad. AI chips. So 80%, give and take. Are they going to get 85, 90? Perhaps. I don't think so. I think their sales and revenue is going to increase, but they're going to lose market share at the same time as the cheaper alternatives come into play. And then from those, you have to look into which are the best options, which is Broadcom, which I'm not a big fan of, and AMD. Taiwan Semi is a completely different story. Taiwan Semi for me is just an indicator that an early warning that a tsunami is coming. So you look at them, and if they say that production is slowing down, then you know a tsunami is coming for the rest of them. That's how I view Taiwan Semi. And just to let people know, a private conversation we had on the Market Buzz chat the other day, you and I, Nestor, were talking about AMD, and I told you, and this is not financial advice, of course, but I'm just saying in the next 3 or 4 years, AMD will be $1 trillion market cap semiconductor company. Now it's 220, 230 or whatever. So if you are willing to hold, and you're going to get the fluctuation of the stocks, of course, the up and down, the volatility is there. So if you're not bothered with the volatility, you're gonna get the thing that you got with NVIDIA 4 or 5 years ago. NVIDIA is going to keep being the leader, but we're not just picking leaders, we're picking stocks and companies that can appreciate and give us alpha. And AMD, it's a pick, it's my pick, I own it, I'm not planning to sell it. So yeah.
Nice. The thing about AMD, which I've always said, right? It's like AMD is number 2 in the race, but I think that there's so much sort of euphoria and not you I wouldn't even call it euphoria. I think there's so much demand for AI chips right now, and we're trying to define what the stack's going to look like, how the data centers are going to develop, and inference is the strength of AMD. And it'll be interesting to see how the sort of product line starts coming. If they like Lisa Su always catches up, she always seems to be second, but she seems to always catch up. So I wouldn't take her off the race. But yeah, I would keep a close eye on just how the products start stacking up as sort of like the AI study continue to develop, because I believe that there's gonna be enough for everybody to take around, right? And like sort of the like they don't have the Nvidia story, which is like both the software and the hardware, but then they could potentially develop that as time goes by, right? And every single company is looking to invest in this. We see in capex increase like crazy, and AMD is definitely going to take some of that, but it's going to take a little bit more time, right? Because Nvidia, I don't know if they got lucky or Jensen is just that much of a visionary that he was just like, I think the Hopper chips, when they made them, they couldn't even sell them, right? Like they
Mhm.
had them in stock, and then all of a sudden there was this need for compute, and then they were able to sell them at drastic levels. And now Blackwell is already like set up for that demand, right? So that's where we see sort of in that sector, which I really enjoy. So yeah, I agree. AMD is going to do well. AMD is going to do really well. It's a little bit high, you know what I mean? Like you said, like I didn't expect this rally to happen this quick. But then again, like right, like we're gonna see volatility in the sector. That's something that will happen, right?
I
So
mean, you asked me in the last episode I was on, and what was it, like 2 months ago or
a
whatever?
while back, yeah.
Yeah, and you asked me to give a price target, and at the time it was like I told you maybe reclaim the 52-week high, which was like 180, and you look at me and you're like, really? It was like because from the 110 to go up there,
It's a lot.
and I don't want
Yeah.
to lie, but I didn't expect this much appreciation in such a short period of time either. I was surprised too. And start going so hard into the earnings, it's never a good thing
Yeah.
unless they report a killer earnings report and they give you like a spectacular like forward guidance, then the stock is going to take a hit. But this is just a bump on the road. And
Yeah.
if you're a long-term investor like we are and you're willing to stomach the volatility, AMD is a good pick.
No, I agree. I agree for sure. I agree
Mm.
for sure. I think it's definitely a good horse to back. I wouldn't take it away from Lisa Sue, you know. Like
Mm.
I really like her. And they're cousins too, so you know, freaking
Yeah,
it's a
yeah.
crazy story. That's a crazy story. But yeah. Timothy, what about you? What are you seeing in the markets? You were talking to me about Ethereum.
Yeah, I want to talk about one, Ethereum, and two, the healthcare sector, what I'm seeing. Let's first talk about Ethereum, and it's something I've talked about a lot in the last couple of weeks. Ethereum is basically bottoming out against Bitcoin, and I'm gonna pull up the Bitcoin Ethereum chart to see who is outperforming.
Because Ethereum in the last couple of weeks, they've actually done extremely well. Like I saw it at 2,700. I'm still biting myself for not buying a little bit.
So basically here, when it recaptured this level, I was saying, yeah, this is the first sign about Ethereum outperforming Bitcoin. And it then broke above the 200 moving average on its pair, which is also the second sign for me to say, okay, let's go. And now we're seeing the next higher high. So it just printed a new higher high on the daily chart. So we have a confirmed uptrend, which is, yeah, for me definitely heading into the right direction for Ethereum. It's now around 7 to 8% of my portfolio because I was so bullish here. I kept buying on every dip or every breakout basically. And for now, it's just for me holding Bitcoin and Ethereum and a little bit of altcoins. I think we have to be careful still with altcoins because if you, let's say, check Ethereum versus Solana, so here is the Solana versus Ethereum chart. It's underperforming. If you check the XRP against Ethereum chart, same here, been going down in the last couple of weeks. Even TRX, which was a strong player against Ethereum, also in a downtrend. All right, so lower lows, lower highs. This all indicates that Ethereum is currently the best player to hold. Next, together with some Bitcoin, of course. I would never really sell all my Bitcoin for Ethereum, but for now it's uh, 50-50 or a bit more Ethereum, like 40% Bitcoin, 60% Ethereum. All right. So even if you want to speculate into like the beta plays, I was mentioning Pepe, and Pepe hasn't really outperformed Ethereum. I'm not sure if I can show that chart, but against US dollar, it's much weaker if you compare just this chart versus the Ethereum chart. This chart hasn't made new higher highs, while Ethereum has made new higher highs. So the chart is very telling to me to be long Ethereum, and I'm basically more allocated to the winner right now, and that's Ethereum. So that's what I wanted to discuss about Ethereum. What do you guys think?
Man, the thing is like it's so tricky just because like I've been trying to sort of like dig deeper into the Ethereum sort of use cases and it's hard, you know? It's like because I know that they are like a lot of financial technologies being developed in the background. So my question for you would be like, is this like, do you think this is a retail rally or is this like a what's it
This is
called?
zero retail. I repeat, this is zero retail. This is only institutions buying. We have BlackRock buying. We have Fidelity buying. We now have Etoro launching tokenized stocks on Ethereum. And this is only the beginning. In the future, you're going to have almost every broker on Ethereum launching their tokenized stocks. Why? Because you can then trade it for 24 hours every working day. That means more fees to the brokers, so they earn more. That's basically what they want. Um, for you to trade it during the night, during the morning, whenever, for anywhere in the world. So I think Ethereum is the tech play of crypto and the main play right now, and retail is not even there. I've posted about how social attention is at its lowest peak, even compared to 2021. Because when you look at the YouTube views, that's something very easy to look for on all YouTube channels that are talking about crypto. In 2021, you saw those big spikes up, like literally parabolic, and now we're seeing nothing, no spike, no uptrend, only just a small blimp, showing really that there's no real interest in crypto, not in Bitcoin, not in Ethereum. But we live in a bubble, we are discussing the markets every week, so we are like 100% watching the charts. But retail, our friends, our family, they're not watching the charts, they're not thinking about Ethereum before they go to sleep like me. They are just um living their lives, and for the moment, there's no real interest. And what Mimi said for a long time, now Ethereum is starting to pick up again. So it's basically the first step into getting into that altcoin phase, because we need retail to buy in and let go altcoins parabolic, that euphoria phase, as Mimi always mentioned. And this is basically the first step we need. We need Ethereum to start outperforming. But do keep in mind, when Ethereum is outperforming, we're not in the beginning of the cycle, of the crypto cycle. We're near the end of the crypto cycle. We're gonna see Ethereum maybe move for 3 to 4 months, maybe less even, and then altcoins pick up for also 2 to 4 months max. It's gonna be very fast. We're gonna see a few months of big moves in altcoins, but you better lock in those gains, or else it will be another 4 years of waiting and patience. So no, retail is not here. Interest is not here. There is a small, yeah, blip, but that's it.
Yeah, it's interesting
Once
because we're
you're
not
gonna
seeing
see
anything.
like 2021, that's when you know things are parabolic.
So, what's your what's your red flag? So you show us the chart, and everything makes sense. Ethereum outperforms everything. So what is a red flag that if you see, you're going to change your strategy, meaning you're going to get out or maybe take profits heavily? and vice versa. What is a green flag that if you see, you're gonna say, you know what, 8%, let me do it 12, 13. If there is such a scenario in your case.
So personally, uh, I still believe Ethereum is a green flag right now. So every dip that comes is a buy. I've been buying Ethereum last week when it dipped to 3,300. And I've been buying before when it was breaking out above 2K. So it's still a buy for me. I still think it's an easy double from here. So in my opinion, it's still a decent play. Don't expect 20K Ethereum. That's not what I'm saying, but um, definitely a green flag because right now when Ethereum is outperforming Bitcoin, it's very early and it still has a lot to catch up. And then if you wanna know like when am I gonna sell, I'm gonna sell based on different parameters. So I'm one watching Bitcoin, of course. If Bitcoin is in a downtrend and ends the crypto cycle, there's not much time left for Ethereum to continue higher. But right now, Bitcoin is still in a solid uptrend, and I think the cycle still continues. Then, secondly, you have to check a few technical indicators to see if it's overbought. I have three indicators that I use and I teach on my altcoin profit toolkit to see when you have to sell your crypto because that's the most important step, and it will tell you, okay, it's overbought. Then you'll get a red zone behind a red background, and it's time to take some profits. And then lastly, look at some on-chain indicators also, like how is the activity on Ethereum? Is it slowing down? How is the activity even on Bitcoin? What are long-term holders doing? What are short-term holders doing? That's everything I discuss on my Panic Drop newsletter. Every month I have a newsletter where I basically discuss all the on-chain metrics that I'm watching to see if we're still in a bull market or bear market. But right now, green flag.
Okay.
Okay.
Interesting. Are you paying attention to the miners at all, Timothy?
No, because like I said, miners are like altcoins to me.
Okay.
And right now, I'm not paying too much attention to altcoins either. I'm just focused on Ethereum because I think in the next couple of weeks, it's gonna still outperform most altcoins.
Okay. Okay. Yeah, it's interesting because like Mara had really good earnings, but then they diluted. So funny enough, like we had a question in the chat. That's why I'm bringing it up. Oh, we have Timothy's logo up in the right. Timothy, you're not using your studio. You're in trouble. You're in trouble.
I'm taking over.
But yeah, okay. So yeah, that's the thing. I don't know. For me, it's like I think I don't know. Core Weave is a very interesting play because of how they did it. They were a miner first, and then they're migrating to compute. So they're going to do the AI sort of infrastructure for big players, and I think Nvidia is helping them out a lot to kind of like acquire all those chips, and I think they have a stake on it too. So they have like sort of like a horse in that race. But I think the miners could potentially benefit from the AI compute race, depending on sort of how they perform. I think Mara is one of them too. So, but they keep diluting, and the investors don't like that, right? Because it's like at this point, it's like let's start seeing the revenue growth more than they just asking for money. But I think it's the right time to ask for money. If your stock is high and you can sort of like take some money from the investors and put it in your coffers to kind of grow, like we're hoping that they grow faster. It's just later down the line. So that's like a longer roadmap, and hopefully the compute continues. But yeah, it's an interesting one for sure. Yo, let me. Oh, somebody asked also. Dragos, Dragos also asked. It's like who buys Palantir at this levels?
I've been selling. I've been selling.
Timothy, you're very quiet.
I can't hear him.
Sorry. I've been
Okay,
selling.
okay, okay,
Okay.
okay, okay,
So
okay,
I've
okay.
been selling around 1 to 2% of my portfolio, just because it's been going parabolic. My calculated intrinsic value sits around $60, which is way above right now. And right now it's around 180, 160. I'm not even sure. Um, but it was a 10 bagger, you know. Would be a waste if I didn't sell. So I sold a 10 bagger for the first time. So up to the next one, you know.
Yeah. Ah, it's good, Play with
It's
casinos money.
it's a good question who buys Palantir at these levels. But you know what? Depending on your time horizon, like how much time do you have? How much do you believe in the company? How much exposure are you are you willing to are you willing to have in your portfolio? So are you buying 1% of your portfolio in Palantir because you think that because the same question was asked in Nvidia when Nvidia was like $1 trillion or like $500 billion. Do you remember, like maybe it was like 2 summers ago when the stock reported and it went up 30% in the aftermarket?
Yeah.
And you are like, well, what
What are
am
you
I
doing?
doing? Who is buying Nvidia now? But after the fact, like 2 or 3
Yeah.
years down the line, you say, you know what, that was a good buy. Can you say the same about Palantir? I don't know because I'm not into Palantir. I never bought the stock, so I don't know too much about it to give an opinion. But it's depending how long are you willing to hold the stock.
Yeah.
That's
Well, right now the PE is sitting at 603 and the forward PE is sitting at 217. So it's
that's
going to
not
take 603 years to get paid based on current earnings.
on current earnings, yeah. Or maybe they can double
Yeah.
their earnings within the next 2 years, keep doubling them like they have done,
Yeah.
and
Yeah, that's the play, right? Like
that's
the
the thing.
speculation here is that it's just gonna grow, like earnings and revenues just continue to like grow
Yes,
exponentially, which it could happen. I just don't know, right? Like I just don't
yes.
understand it enough to kind of make a solid prediction on it. But
Hmm.
again, there's been many stocks where I've made a ton of money, and there's many stocks where I've just stayed on the sidelines, and I'm okay with that. You know what I mean? I'm okay with my returns. I'm okay with my sort of like opportunities as long as I understand it and I know what I'm holding. I'm okay. You know?
Look at the banana zone.
Yeah.
This can't go any more straight. This,
Yeah.
this is already going parabolic. So
Yes,
either it's gonna correct down drastically
Yeah.
and then move up again, or it's gonna go much higher but crash and never see highs again
Yeah.
for multiple years.
yes,
It's interesting because I heard a podcast recently where they were talking about whether valuations matter at all nowadays, right? Like, and it's like, do they matter? Is it important? And it's like, yes and no, right? It tends to be whenever they start missing earnings and revenue expectations, and everybody starts looking at the stock, that's when the valuation matters. But whenever they are outperforming, nobody cares. Just throw the money at the company; it'll just grow, right? Because it's just good news on top of good news on top of good news on top of good news until the bad news happens. You just continue to plow and say
yeah,
it's crazy, right? But yeah, it's an interesting question. Palantir at these levels I mean, it's scary. Like I usually tend to trade that stock with options. I don't think I've had a one earnings call where the company just doesn't bounce right off the bat. It's crazy. Even though the premiums are expensive, you end up getting paid. So let me ask you guys, what are you guys trading right now? I have a no. Actually, there's a question for Timothy. Now that I have you here, do you know Hype Token?
Yeah,
You're
yeah.
the
I own hype. I
okay.
can
Talk
pull up the
about it.
chart.
Talk about it, Mister Pablo wants to ask.
Hype. I did a blog about hype months ago. Not ideally. I was talking about it here, so it dropped. But then I bought even more. But basically it's like the competition to again, um, let's say Ethereum, and it's pretty fast, so it's very nice to use, and it's used a lot to trade perpetuals. So hype has a lot of volume going on the chain, and recently it did broke the $40 level I was watching. It came down for a retest again, so I sold some of my position. I'm still long. I think the uptrend is still strong, but potentially looking to rebuy at either $33, or if it can reclaim $40 more convincingly, with more conviction, I would say, then I would take a long again. But as you can see, this doesn't has a lot of history, so you have to be careful just holding these things. I rather trade them, get in, get out,
So you're treating
in
it like
case.
an old coin.
Yeah, yeah, yeah.
Okay.
It's not like competition to Ethereum of
Yeah.
Bitcoin. So
Mimi says
basically,
she's a
it's an
skeptical.
altcoin.
Mimi says she's a skeptical, and I take her like I take her. Timothy and Mimi's worth on crypto is gospel. For me. so
Yeah,
so
yeah, yeah.
yes, yeah. Okay.
So that's
All right.
my opinion on hype. But I was talking about all the things I was having on my desk, and I first talked about Ethereum, but I also wanted to talk a bit about healthcare, right, Dimitris?
Yes.
Because I think you and I we are watching UNH. I think Mimi is
What's
also a
happening?
big
Yes, I'm in it
holder.
too. I'm in it too. I keep buying the sucker.
Nestor is in it, so
I just bought some more.
it's
Everyone is in it.
trading at
Yeah.
lows not seen since 2020.
Mhm.
And it's not only UNH, but it's a lot of healthcare stocks that are basically down against the S&P. S&P has been making new highs. Tech stocks have been making new highs. Financial stocks have been making new highs. The only sector that's a bit lagging, it's healthcare sector, which is very unusual because if you think about it, are we still gonna be sick in the future? Are we still gonna need some insurances in the future? Yes, and those companies like UNH, ELV, they're gonna lift up their policies. They're gonna get more premiums. They're gonna earn more. The revenue will grow in line with inflation. So this is basically a no-brainer for me to be buying at these levels because if you're a long-term holder with a lot of patience, you just know this is gonna be a big rebound. And I went and looked at the chart, and yeah, it had like one big correction here in 2005. But as you can see, if you're just like a long-term holder, eventually these companies, they keep earning more every year and every year, and then eventually, yeah, the stock will catch up and make new highs. So basically that's what I wanted to say. UNH, definitely a player to watch. There's two reasons why it's dropping so much. One is basically they're getting an investigation on fraud. So they did some medical research on patients that said they're really sick. Your policy needs to be higher, so they pay higher, but it's not the truth. So they're lying about how sick their clients are, and it's a research, so nothing is proven. But drama, stocks can drop eventually. And the second is about their latest earnings, where their profits per earnings dropped more than expected. But if you check their revenue, the revenue is still going up, so that's the most important. Just the margins are a bit yeah,
Squeeze.
lower.
Yeah.
So in the long term, you could know already that UNH is gonna lift up their premiums, and people are gonna buy it because they need. It's a white mode company, which means that basically, where are people gonna go besides UNH? They're gonna go to ALV and some smaller players, but UNH is like the biggest one within the healthcare sector. So I think in the long term, this is gonna rebound. Also, the profit per earnings. Yeah.
Okay.
Yeah,
Do me.
it's a solid play for sure, but the problem is that the timing. So the timing is tech is going crazy, and crypto is going crazy, and no investor is operating with an unlimited budget. You have a limited amount of capital that you can play with, and you can tide it on UNH at 2, 3, 4, 5%, because you know the rebound is coming, but you don't know when it's coming.
Yeah.
So you might waste. It's a loss of opportunity. you can you can lock it on UNH, or you can play it with Palantir and AMD and Nvidia and get it 10, 20, 30%, or hold it with UNH and the stock keep going down. That's number one. Number two, it's a bit technical because the fundamentals, we know them already. We know everything is out there. We know about the investigation. We have the new CEO. They removed the guidance and then they gave it back a little bit on July 29th. So all the bad news are priced in. So it's not fundamentally, it's just technically. It's
Yeah.
way below the 200 moving average, which for a lot of people means a lot. For a stock to be underneath the 200-day moving average. That's another one. And it's healthcare. It's boring.
Yeah.
And unless it start going parabolic, nobody's attention is going to be point to UNH. But it's a member of the Dow Jones, and you don't get into the Dow Jones unless you are the top, the cream of the crop, the blue
Yeah.
chip of blue chips.
The diamond of America. The
Yes,
diamonds of America. Yeah,
yes.
yeah, yeah.
So if you ask me an estimate, when are we going to see a move? I think in the Q4 we might start seeing things come back to life because investors have to. The stock goes up if investors buy the stock. It has nothing to do with earnings. Uh, Investors have to buy the stock, and an opportunity has to happen. Have to, People have to take earnings from something else and say, you know what? Okay, it's been long enough. It's been since April. Time is coming, but again, this is just speculation. So as long as long as I am ahead of the S&P year to date, then I have the leeway to buy more UNH. If I wasn't ahead of the S&P for the year, only if I was going to buy the last buy I did last week. But I'm a big believer in the stock. And another thing why I bought it is because this is the third year of the bull market, right? 23,
Yeah.
24, 25. This is the third year. Start counting the days, start counting the months, how much longer we have in a bull market. I'm not saying this is the end, but they don't go forever.
Yeah.
And the latest we get into the bull market, into the equities bull market, the more I want to hold healthcare and
Yeah. Well,
consumer
it's getting so cheap, right?
Yes, and consumer staples. Another name that I really like is BJ's. It's like Costco. I know you like Costco, Nestor.
Yes.
It's Costco from 20 years ago, like a small cap, 15 billion, which is it can be like a 10x in the next 10 years. Again, this is not a financial advice. This is what I have in my portfolio. So as we, so my play is as we start taking profits from crypto and tech, then I'm going to reinvest into the cheap valuations of consumer stable, healthcare, maybe some energy. And then when the rotation happens, and then what I just mentioned is going to appreciate, then we go the other way. That's contrarian in some ways, but that's the way I look at it.
Yeah. No,
If
that's fair.
it makes any sense.
No, it does. It does. It's like
Yeah.
they've been beaten up so much, and I think the big beautiful bill has a little bit to do with this, just because they are cutting down on Medicaid and they're doing sort of like changes in the medical system in America. So we're gonna see some turbulence as the markets start figuring out how to get through this. But there's also a lot of benefit that's coming with the big beautiful bill as well. So again, it's just it's interesting that everybody talks about defensives like healthcare or gold whenever the market is fully collapsing, but right now when there's not that euphoria on the defensives anymore, nobody's talking about it. The stock moves to the downside and nobody pays attention. The reality is like there is buying opportunities right there, right? Like whenever somebody tells you buy UNH next, it's probably going to be at a peak, right? Or something when
Mm.
it's coming higher. So that's where sometimes you have to look at why the market is acting the way that it is. And I do believe that it's just bad news on top of bad news on top of bad news, which actually gives me a very beautiful like pivot, right? Because
Mm.
it's like they asked about SMCI, Pablo asked about SMCI, and it's a company that I hold in my portfolio. It's not a massive position by any means, but it's an interesting one because they just had bad news on top of bad news on top of bad news, and the stock got so overly punished. I think we reached the 20s right now, so we're sitting at 47. But we were sitting at 60 just before the earnings. They missed on the earnings, even though like the results have been sort of like good, right? Just because we missed those expectations, the company gets punished, right? And then the question is it going to continue to go up? Is it going to continue to go down? The question is like, are they going to continue to miss earnings? And how much are they going to miss by, right? Because you can see the last three E's are in the red, right? So the last three predictions that the management has made have been wrong, right? But they've also had really good results, right? I think year on year they grew 48%, which is fantastic for a company like this. One of the problems that I see with SMCI is that their margins are sort of like eatable in terms of the AI revolution, because they're making like liquid cooling systems for the Blackwell chips that are going to be coming out, right? Somewhere the hyperscalers are going to have to save costs, and when there's more competition, there's
Mhm.
more likelihood to put the prices down, right? Like you don't have that pricing power, right? It's like you might be the best at it, but if there's 10 other people making the same product, you kind of run into issues, and you're competing with Dell, you're competing with other companies that do sort of like that could do something along those lines as well. So again, SMCI at 20, it was a great investment. Right now, I'm still holding it just because, but I bought it because of the fiasco that they had in terms of the financials. They
Mhm.
had gone through that before, so I had a feeling that they could potentially come out of it unscathed, and they did. But again, they keep missing on the earnings, and it's something I don't like. So I might be trimming a little bit. But again, I'm not a financial advisor. We are all not financial advisors. Do your own research. This is just for conversation purposes only. Get inspiration, but make your own decisions. Is your own money at risk? You can also look at our portfolios down below and have a look at them and see what we're buying and what we're selling. Make sure to follow. But if you copy us, you can lose money. So there is the disclaimer, Etoro. You're welcome. You know what I mean? But yeah, right. Like I just think that sometimes the market overreacts, and our like right like our job is to kind of see whether that's an overreaction or it's warranted. And if it's warranted, we stay away, and if it's not warranted, then we look at it the other way, right?
The market most times overreact on the downside or upside, and it's very rarely that the market is actually rational and pricing correctly anything. Uh,
Correct. Well, yeah, yeah, yeah,
so
yeah.
you have to make up your mind if it's if you are getting more risk, if you want to get more risk, or take some of the table. So
Yeah.
that's basically what it is. But one more thing I want to talk about the Fed and what's going
The
on with the
Jerome Powell. Are we gonna talk about the Fed? This calls for an episode of its own, but I'm down.
I mean,
Timothy, how are you doing with time? Let me just ask Timothy how he's doing with time.
10 minutes. 10
10
minutes.
Okay, okay,
minutes.
okay,
All
okay.
right,
We
10
got
minutes.
time. We got time. Let's do it.
All right. So on July 30th, it was the Fed meeting. It was the first one I missed because I was on vacation. It was like my last day. I had so much going on, and I couldn't get to do it. But it's upsetting with the U.S. government that two departments can't get on the phone and one inform the other that, you know what, maybe you want to see these numbers before you make a decision.
I'm
Because
surprised.
yeah, because the Fed keeps rates at the same level, holding rates, and then we get the jobs number 2 days later, and it's like a complete miss. And which I believe, if the Fed knew that information 2 days earlier, well, at least we're getting like a quarter point, and a quarter point is not going to save anything. But if we get another miss next month, and then they're going to start cutting, like giving us those jumbos, like half a percentage. I mean, these things are not good. It's going to spook the market. Forget it if we get an emergency. If we get an emergency, forget it. This is like a shit show. Palantir is going down to $60 if we start getting the emergency, because it's gonna spook the markets. So can these two guys get together on the phone, and can somebody call Jay Powell and tell him that a report is coming that you might not gonna like in 2 days. I mean, it comes down to that, but in my opinion, it's just ridiculous that we have to do it this way. You have to,
Yeah.
like, it's like they can't share information, the two departments between them. I'm not saying tell us early, but at least tell him.
Yeah, like
But
make the best decision possible, right? And
yeah,
if you're close to the number, let them know the number so they can at least make the best decision possible. You would think, like I
yeah,
was so surprised at the fact that Powell comes in so hawkish from the call, and then we had
yes.
those numbers. I had assumed they told him something, and it was like, oh, jobs data is fantastic, but it's the opposite of this, right? We're getting
No,
massive revisions.
you know what?
May, June,
He
it's
knows.
crazy.
You know what he does? He gets the news from CNN like the rest of us, not
Yeah,
CNN.
yeah, 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 yeah. CNBC, CNBC, yeah, 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 yeah.
He gets the news from CNBC like the rest of us.
Yeah, he watches. He just goes market bus, and he's like, okay, like let me figure out this number.
You know what? You know what? The Fed employs 3,000 economists. 3,000.
Yeah, yeah,
That's a lot of budget. That's a lot. That's a big budget. Okay,
yeah,
and they can't get it right. I
yeah.
mean,
Funny enough, like, do you see? Like, let me show you the screen. So this is what the market is expecting the rate cuts to be. We were sitting at around of like I think we were sitting somewhere just after Powell. Here, let me go here. So just before Powell, it was like just before Powell, we were sitting almost like a 30-40% cut. Like we
Mhm.
were saying no cut, and then we got that data, and the probability shifted. Now we're sitting at 91% cut in September,
Mhm.
a 60% cut in October, and then December we are potentially. So we're potentially the market's pricing in right now 3 potential cuts.
Yeah, that was my forecast, 3+. Well, no, it was like 3+, but 3. If we get 3, and we're probably getting a jumbo in there. We're not getting just a quarter point. We're probably getting like a 50, one of them.
Yeah, but I agree with you, right? Like a quarter point is not going to do anything in the long scheme
It's
of
not going
things,
to do.
right?
It's not. You know what? You know what? I don't feel bad for Jay Powell getting called names by Trump.
No, I do. I think he's doing a great job. In all
No,
honesty, I think he's doing a
I
great
think he's
job.
doing a great job too. But if he cut like a quarter point in June,
No, like the thing is like he has the ammunition. We're like saying, oh, like look, I have this bullet and I can throw it at the zombies that are coming, right? But there's no zombies right now. Some zombies are starting to rise because of the jobs data, but it's not Powell's fault. The data's wrong. You know what I mean? So he's trying to drive the car, and finally he's looking forwards, and then he's looking he's looking in the rearview mirror, and the rearview mirror is all scratched up. You know what I mean? So it's like before we were looking backwards, but it's like right now everything is scratched up. Now we know why he has to look backwards. It's because the data doesn't work. Like we cannot trust the data that's coming out if we're revising by that much. Right? Like how good is American data now? It used to be sort of like the holy grail of understanding how the economy was moving and how everything was moving, but not anymore. The question is what can you trust? What can you trust?
you can't trust anything.
You know, it's insane, right? So it's like
You have to get the numbers with someone said on one of my posts. You have to take the data with a mountain of salt.
10
And
kilos, 100 kilos, 1,000 kilos
yeah,
at this point. Yeah, it's crazy.
yeah.
It's
And you
crazy.
know what? I don't feel bad for Jay Paul getting called names by Trump. I'm not saying Trump is doing the right thing, calling him names, because that's not right. But you know what? You put yourself in a position to just cut the damn thing. Just
But he
cut.
can't. The thing is like if they need to cut, he can. The problem is like what happens if inflation goes to the other side? He cut already, and then he's not able to do more. That's the
You know what?
problem I see.
My fear is it's a recession rather than higher inflation. Like if you ask me which one is more likely,
I think they're tilted. But he
yes,
did say in the call, he was like, look, we are looking at the numbers of unemployment.
yeah,
Unemployment just ticked up a little bit,
yeah.
but the non-farm payrolls is the thing that's scared, right? So that's where I'm seeing the like sort of this spark. But at the same time, it's like if Trump has like this was one of the comments that I like it drives me nuts. If we are in the best economy the Americans have ever seen, why are we cutting rates? You know what I mean? If the economy is so good, like Trump says, why are we cutting rates? We shouldn't be cutting rates if it's so good, right?
No,
When we
no,
see the
no,
deterioration, we
no.
use it as a stimulating tool.
No, you have to get to neutral. You have to get to neutral like 2.5%, and then if you get a recession, then you cut to
Zero.
1%.
We're going to zero.
or to zero, but you have to get to neutral. You have to give people an opportunity to borrow at the lower cost, so people can get houses or whatever they want to buy with. Just having like higher rates doesn't help anyone.
Yeah. The thing is like I just right now it's okay. We had inflation. We're still coming off it. You know what I mean? Like we're still not at that rate that we want to be in. 2%. It's still 2% on the higher level. So the
Mhm.
consumer is getting hurt. We're seeing the consumer getting hurt. The data is starting to flash real yellow now.
Yes.
Back in the day, I was scared. Now I'm more scared. That's why I'm taking money off the table. Timothy, what are your thoughts on this?
My thoughts is, yeah.
Go buy Ethereum. No, I'm joking. I'm joking.
I want to get back on Dimitri's points before we were talking about Powell and the Fed. Like Dimitris was saying, there's a difference between, a stock um, in technical problems, the charts, and there's a difference in a stock being in problems in terms of the business, a broken stock or a broken business.
Mhm.
That's how you differentiate between, am I gonna buy this or am I gonna avoid this? Like UNH, the business is still doing great. We can buy it, but Intel, for example, is an example I compare with. Is, in my opinion, not. I don't know if you hold it, Nestor, but in my opinion, it's
I
not
want to buy it.
as
I
valuable
want to
as
buy it.
valuable. It's,
I
in
want
my
to buy it
opinion,
because of the position
it's a
that it's in.
broken business.
It is. It is. But America can it has the same problem with Boeing. America cannot let Intel out of its sights. It's the American chip manufacturer and it can't let it go. So I have a feeling something will happen and if Trump is already calling for the CEO's head. It's crazy. Like today the stock's down because Trump was like the CEO needs to resign. They just chose the
They
guy.
just guy, you
They
just got a guy.
just chose the guy. Let him, like Trump was like, I just got here. The other guy just got here. You know what I mean? Let him cook. Like he was the CEO that I wanted that I wanted them to choose because he's from Cadence Technologies, I think, or like a microchip company that's actually done really well after earning 6% up. Like I think that they could potentially get them out of the sort of gully they're in. But again, it's a high risk play. Am I gonna put the same amount of money that I have on Nvidia? No. But a 1% trade, why not? Intel, it's still Intel. You know what I mean? Like they just didn't make GPUs, but it's still Intel.
Don't you think Intel is like Chrysler or like the car companies from Detroit, like the old guard of technology? They've been around for so long, they got complacent, and then
Yeah,
the new players came and wiped them out. That's
a
how.
hundred percent. 100%. It's exactly that. It's American exceptionalism at its peak. And what
Yes.
happens when you are so comfortable? You get chewed under. You know what I
But
Speak.
mean?
Nestor, I do understand
About,
your point. The thing is, you're trading it. I'm talking about
Yeah,
holding for multiple
yeah.
years. Like, you don't want to hold Intel for 10, 20 years now.
I agree. I mean, maybe. You know what I mean? If they turn it around, maybe because they are able. If their technology is somewhat if they make the right call, if we focus at like 2026, 2027, and they can start actually making competitive chips, but it's high risk. It's a high
Do,
risk. It's
do
it's
you know
it's
how
extremely high
difficult is?
risk.
Do you know how difficult it is to pull off a turnaround in the
It
stock
is.
market?
It is 100%.
Oh
A
my
hundred
God,
percent.
it's impossible to do with good companies. Okay,
Yeah, 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 yeah.
I mean, it's extremely difficult to do with Intel. But speaking about American exceptionalism, I think the U.S. stock market is back.
Ah,
Okay,
yeah. You called it. Is it
It's-
outperforming? If is it outperforming the European one? I wonder. Is it outperforming?
yeah, today I don't think so. Why don't you check? Check the S&P versus what is the stocks 50 or
The, the
whatever they are.
European banks are outperforming tech. So,
Yeah, but how long are
Yeah, yeah,
European banks were
European
underperforming
banks.
tech? You know, what's the time horizon we're trying to trade here?
Yeah.
Yeah.
No, year to date, he's correct. I think Deutsche
Yeah, yeah,
Bank is
yeah.
like up like 100% or something like that.
Well, I saw German manufacturing came in way lower than expected. People are assuming that Germans are just gonna start friggin' don don, you know what I mean? But apparently
Mhm.
not. It's like
Okay, so
manufacturing is coming down.
so
Yeah.
was the S&P versus the
What's
stock.
the what's the freaking what's the index for?
Stocks, STOXX 50,
Yeah, the Euro 50. Okay, here we
the
go.
Euro
Let me
50, yeah,
compare it. Let me full screen this and compare.
with the S&P, not the Nasdaq.
Yeah, okay. Let me have a look. The thing is, oh, by the way, something super interesting. The dollar, the US index decline. Are we still based on the euro at all-time highs in the S&P? Because it's like if you grab the S&P 500 and divide it by the euro, we were actually not sitting at all-time highs, which is super interesting because the
Mm,
decline of the US dollar has had a lot of rise. I wanted to talk to you about this for a while. We need to do an episode, Dimitri.
yeah, let's do on the weekend.
Yes, yes. All right, let me try to get this. So it's the EX versus.
Guys, I gotta go.
Okay,
But
okay.
you can stay.
I'll show this and then I'm leaving because I have to leave too. I have to leave too after this. But
He has to do construction.
I'm trying to get the compare, the year-to-date comparison. The year-to-date comparison is like
The construction is ongoing in the Mendoza household.
so much. If you know, like it's crazy. There's nothing passive about passive income.
There you go.
Nothing passive about real estate.
Show us the chart before Timothy leaves.
I'm trying to, but it's like I'm having. How do I? Here, just give me a second. Timothy, are you better than me in? There we go. Okay. I got it. Yes, is that it? A spy. I'm just using spy because why not?
We have 4 months
Okay,
to go before the end of the year.
this is super interesting. Okay, give me a second. Give me a second.
Because I said at beginning of the it during the Liberation Day volatility that by the end of the year the US outperforms Europe.
So,
Okay, so
so
what we
January 25. Let's go January 25. Right? Okay, still outperforming. So from January 25 to August 25 is still the fast apparently. So the SPDR Euro Stock 50 ETF. It is underperforming. It is.
underperforming? Yeah, I know it's
Yeah.
underperforming, but
But it's catching up.
we have the rate cuts in the Q4. You know what? If the rate cuts come through and the thing goes crazy with everything like in 21, I'm gonna seriously consider like getting more conservative with my strategy for 26. Just putting
Okay.
out there.
Okay. All right. I think we're good. I think we're good. Let's end the stream. Let's let Timothy go. He just wants to go.
He
All
has an
right.
he has an appointment at
Yeah. Yeah.
at
Yeah.
the,
Yeah.
at the neighborhood pub.
Yeah. Thanks so much for watching, guys. I appreciate you all. Peace out, everybody. Have a great day.
Nice to see you guys.
All right.
Bye.
I've stopped the stream, which is fantastic. Cool. And then let's stop.